This is a market review for January 31st, 2025. Today was a TGIF day, which means we can expect a 20 to 30% retrace. What changed from yesterday? Because yesterday I didn't think we would have one. What changed is that we had a crazy bullish run in AM session of New York, which was caused by consolidation throughout overnight. So that would be London session as well as pre-market of New York. So we did end up closing bearish on the day after filling in the new week opening gap for this week. This does mean on the weekly we did close bearish, but retraces are okay. Now as we go to not the 15, the hourly, you can kind of see here's London, kind of just went consolidated, which means that we're looking for accumulation, manipulation, distribution. This is definitely accumulation here, which then means that this bullish move here is manipulation. I'll go deeper into why that is on a lower time frame, but we did come up for the manipulation, fill in the new week opening gap, close inside of this first presentation, which was Wednesdays of last week, and then obviously distributed lower, reaching the 20% here and 30% here with these yellow lines. Now, on the 15 minutes, it is easier to see the accumulation. There was no real internal or external liquidity taken with the extent enough to trip people in. We did take it here at 7, but we took it and we came right back down. That's not manipulation. Manipulation is something that if you were chasing price, you would be very likely to join in and follow the move. More something that breakout traders would get caught in. But we can see here, this low also wasn't manipulation because external is still intact. And so price ripped up for New York session. Market opens, rips up. Again, last Wednesday's first presentation, reversed. Let's throw up these. So this is lunch. Lunch comes down, takes out sell side because buy side is profitable, retraces up into this, which is also constant encroachment of first presentation. And then we distributed lower towards the end of lunch. And we kind of consolidated, slowed down the volume for the day until 2:30, which I kind of picked up again. And then obviously consolidated until close. Now in the 5-minute, you can see better. Nothing really here. I mean, a couple legs down here and here, but for the most part, we're staying in this area here. So we have manipulation bullish. I'll come back to my entry on the 1-minute. Came up, 5-minute here, pushed us higher. First presentation, reaction, lunch, took out lows, retrace, tiny gap here, constant encroachment. Little inverse here, if you can see. Price reacts off this bullish, validates it, it breaks down, closes, next candle taps in, and then expands. I'll mark that to see how it affects everything on the 1 minute. And then further down through the expansion, algorithm kicks back in, 5 minute fair value gap, 5 minute fair value gap here during this macro, 5 minute fair value gap during this macro for the last pump down of the day. Now, as we get down to the 1 minute, let's talk about this entry. So, I saw, well, first let me say this. From 9 to 9:30, that's this candle to this candle. We do move. We move down. We react off of this, very messy. Don't react off this. Don't use this. Don't use this. It was very, very messy. It moved, but wasn't very, I'll say, very smooth. Market opened, price ripped up and down. Sorry. So with this being messy, 9 to 9:30, I'm expecting a very lackluster opening range, which kind of happens, but then doesn't happen. So it's just a rule of thumb that I've used. Maybe it's not so much. Well, it could be this. If 9 to 9:30 is playing well, 9:30 to 10 will play well. But if 9 to 9:30 is not playing well, 9:30 to 10 has the possibility of not playing well. And I don't really know that I want to take those odds. It's something that lowers the probability. Now we have inverse fair value up here within first presentation, validated here, rejected, boom, validates it, breaks above it, comes back down, constant approach when we expand higher. Now, once we get talking to my entry, with these highs, which were previous daily highs, these were untouched on ES up at this point. And I saw these two huge red candles, so I entered after this close on this low here of the inverse fair value gap. Now, that was preemptive, very preemptive. I did jump the gun a little bit, but this is good because it helps me learn when and when not to use inverse fair value gaps. Because this is definitely a time where it didn't work because market wasn't ready to reverse. Now there's something that I'll speak about later that can help with that. Right? So my thought is it's in the macro, good expansion lower. We've manipulated a decent amount up, probably getting some people in. It's time to head lower. We do head lower eventually, but not yet. So that was a pretty cut and dry trade. Got in, got out in like 2 minutes. Unfortunately lost it, but we did learn, so that's good. Again, fair value up here, push price up, same with this one. We had an SMT here, which gets taken out. My thought is I was looking at how price was reacting off this new week opening gap. Seemed interesting to me, but we never got a confirmation of expansion. And something that I was talking about or wanted to bring up, if we look here, this is a bullish fair value gap, buy side imbalance, sell side inefficiency. This could have easily been an inverse, right? And there are many other places in here where we could have played short here, this fair value gap, well, many places, that's about it. But something that happened up here, which is what in my mind validates it as a inverse fair value gap, is a bearish reaction. sorry, a reaction of the fair value gap in the direction that it's meant to be. So, for example, here, buy side imbalance, sell side inefficiency. Price comes all the way down here in this candle and rejects up and closes outside of it. That's a reaction, in my opinion. Validates it. So once we break below it, that validates this as an inverse fair value gap. So this is what we can do off of that. We can put entry at the bottom, stop at the top. Oh, actually, I'm incorrect. That would not be a play because this is not an SMT yet. Once we get this SMT, that's confirmation, right? So we get confirmation with the SMT. We also get confirmation that we're playing bearish with this validated and then reacted off of twice, meaning we can take this. The next fair value gap, we're in that. This high is up here. If you look up there, 946.25. This high is 946.50, so just enough to get us in the trade. That would look something like this. Stop would be about there. First profit, I like to put it around 1 to 2. Probably put it below this low. Or this one. No, that's not enough. Here. Put it there. Finals would either be there or down here. Seeing as with the time, I'd definitely put a, okay, partial here, full here. It's an example of something that I could have done. But again, I wasn't watching the markets at this time, so even if I did see it, I wouldn't have been able to take it. Yeah, so we come back here. This is a 5-minute here. We react off it as well as this new week opening gap. Here, lunch starts. Buy side has been profitable, so we target those stops, which are here. Take out these, play higher one more time. First presentation, concentrate encroachment, down, up, SMT of these highs. I'll say this, there are times where I am wavering in my belief that the markets are ran by an algorithm, right? But then I see things like this. This low, look up here, 925 even, and this high, also up there, 924.25, so 0.75 of price. And the candle just happens to close right as in the middle as you can get of that. Some people wouldn't notice that. But with the stuff that I know, that's a little too precise to be buying and selling pressure, in my opinion. Just saying it. So with this SMT here, this could have been an entry with us reacting out of it. Now this 5-minute inverse is less clear on the 1 minute because it kind of just looks like price goes back and forth in it. Yeah, I think this is where it taps into it and then expands. Or maybe it's here. Candle closes, opens, tap into it here. Yeah, as well, it's either here or here that it taps back into it. But then we get big expansionary candle, fair value up, expands lower. Price tries to come up to take out highs before heading lower, dumps anyways. Inside a 5-minute and this 1 minute, boom, reaction, constant encroachment. Starts to chop up, but that's with a explosive AM session. I would expect PM session to kind of be lacking. And then here we are, hit that 20%, retrace, first presentation. Well, actually, first presentation's over here as well. So not only is it constant encroachment of this 5-minute, oh, this 1 minute really, it's this 1 minute, but it's also reacting off of two first presentations, this one and this one. So retrace first presentation, down, up, another expansion, down to this 30%, retrace, 5 minute, inside this 1 minute, takes out those highs, heads lower again, and then consolidates, because we've, in my opinion, already reached the target, the final target of 30%. So don't really have to do much, which ends up happening because we just get a little spike, but no real progress after that. So if we look at the week, this week was kind of just all about making up Monday. Definitely a difficult week as far as trading goes. Not much volume, not much directionality, but we were still able to predict most of it, which is a good sign in my opinion. I was going to buy a funded account this weekend. However, I would like for my profits to be a little higher and my win rate to be a little higher before I do so, so that passing it with a reasonable amount of leverage per trade doesn't take me that long. Ideally, I get it within a month, but my goal is to either have $2,000 a week or $6K a month before I purchase it. So that's where we are going forward. As far as the next week goes, next week is the start of February. I am curious to see if the weeks of the month play out like the days of the week. January sure looked like it. First week was bearish, next 2 weeks were bullish, and then that was this week. December kind of played the same, bullish and then bearish throughout the rest of December. So we will see what the first week brings as far as that goes. We are in this rally up here, reacted off of it bullish, broke through it on both sides. So now I'm looking at this as a reclaimed bullish. So next week I am looking to play bullish. Monday, Tuesday might drop to constant encroachment of this wick, tapping into all of these new day opening gaps here before expanding higher. But that could also not be the case. We could play lower because it is January. Sorry. We could play lower because it is the first week of February. And if we're looking bullish high time frame, like on the monthly candle, that means that the first week or so should be bearish. But again, that's just speculation. I've never looked at the market that way. But I think there could possibly be some value in doing so. So we'll do that for now just to have record of it to look back on it. So yeah, this has been a market review for January 31st, 2025.